Good morning. Welcome to your trading week. So let's kick off with our outlook for euro dollar. We're on our 3-day and we are retracing this big move that happened in 2021, and we remain as expected. We're having a little bit of a break period here. We've recently hit our target, which was the liquidity here, which is actually on the weekly. We've gone down to a weekly level on this one because it's so busy here, so we don't want to get distracted by too many levels. But our key high on the weekly that we're looking to break next is this one here. We're inside the liquidity, so we're okay to take targets, which we have taken profit, and either we'll grab the liquidity and then perhaps have a bit of a retrace, or we'll just retrace here. But I think we are going to continue to trade longs, obviously, but I think we will see a bit of a pause here in the euro dollar, maybe a bit of a retrace back to some levels down here to grab some liquidity before our final push up. As we said on the bias outlook last week, if you're following these weekly, is that when we are retracing smaller ranges, so for example, the last 2 years, we had these kind of up and down ranges, they form pretty quickly. They get to their last level and retrace the 100%. So it's quite nice and easy to trade ranges on higher time frames. If you're trading lower time frames on higher time frame ranges, it's really nice trading. When we're retracing huge levels like this, we need to just be aware that price can pause for a significant period of time. For example, after this level was formed, we took out the lows here, which is a level on a much higher time frame. We went long, and once it hit the 61% retrace of this level, we've been in this range for a couple of years, so it was quite significant. So we're going to just see what price does here. We'll continue to trade longs, but if we get a proper retrace, we'll continue to trade longs to this level, and then we'll look for breakouts of this level, because we may just be sitting in a range here and we'll trade that. So it's always evolving, but we're going to just stick with the simplest outlook, which is it's telling us it wants to keep going long, but we're at a level here that we need to just respect that it's grabbed liquidity. This would give it a bit of momentum back to the downside, where it should grab liquidity, possibly down here in our next liquidity area on the 3-day, which is the gray box, and then we'll be looking to go back up. But if we get any signals here, we will just trade them long. We're okay with our long bias. We don't know what price is going to do, but our bias is long. Okay, next chart we're looking at this week is the US dollar versus the Canadian dollar. Again, if you've been following these weekly, you'll be familiar with what we're looking at here. Let's just quickly zoom out so you can see the really big structure here. Top, top, top. These are really historical, 2020 and 2016. 2020, we're seeing a few pairs taking out or grabbing liquidity at these extreme levels at the moment. So we've got a triple top, and we're ultimately targeting this zone back down here. That's a really big range that's been forming for many years. But again, is it going to, like in previous times, this kind of went top to bottom pretty quickly? Are we going to have a run like that, or are we going to be a bit more kind of grabbing liquidity as we go? We don't know. At the moment, we've taken out the first level of liquidity, which we were expecting. The short bias is absolutely confirmed here. We're in this next kind of interim liquidity range. This is the push that ultimately caused this breakout. That's quite significant. And we are still trading shorts, but we will obviously just be looking for confirmation once we get down here for the break below this level, because then we can continue to trade to the 61.8 level of the wider structure. I think the other significant piece, as we said on our last outlook, if you've been following, we were looking on the 3-day for price to reclaim this 3-day 200 MA, which it has done. So pretty good news for the shorts. We're going to remain on our short bias. We don't want to overcomplicate this, and then we'll just continue to follow what price does. So it's worth just following along with these weekly. I do Outlook every week, so keeping track of what pairs you're interested in doing makes it quite easy to continue trading them and be a bit more reactive as price tells us it wants to do something else. Okay, and finally the New Zealand dollar. I've got a trade open on this. I'm going to do an outlook on it to just explain why we're still long. So this one's a lot simpler. We are on this recent high, low. We've been trading longs since January on this pair. Okay. The structure to the upside was we had a break of structure here in March. So all of these trades are actually quite nice. Traded long January, February, March. Confirmed the break above structure here. So the long side was confirmed in my strategy. We then had a liquidity grab, a pretty vicious, quick grab of liquidity. We didn't break any structure here, so we were happy with our long structure. But it actually took out liquidity back from 2022 and grabbed kind of the end piece of 2020. So it's pretty historical levels that were grabbed here. And then you can see price ran pretty hard. We had a little bit of a issue entering here, mainly timing issues. So if you got in on this trade here, great. I was a little bit late to the party. I just missed the entry, but we're not chasing trades. So luckily I'd had a couple of good trades in here, but we've now hit the liquidity here at the 61.8 level, broken that liquidity, so confirmed that we're still bullish here. Sometimes price will go here and then just run back down, but we want to see these levels be broken with closes above the levels. So we're confirmed that our phase of 61.8 is now in progress, and we're targeting the grey level up here. So we're expecting fairly simple structure on this. Again, we don't know if price will run quite hard up here, or if it will be quite, back and forth, grabbing liquidity to keep pushing it higher and higher, and slowly kind of going down to the lows, grabbing liquidity, and then making a higher high, and just keep doing that for a few weeks. We don't know what price is going to do, but either way, we're only bullish, only long in this pair, and we are entering any new longs we get. So hope you enjoyed that. Happy trading. Make sure if you're trading other pairs, just make sure you're going to higher time frames, minimum, I think, daily, if not the 3-day. If the 3-day is too congested, go to the weekly. Just get perspective on what's actually going on, and then you can go down and just know that you're trading in a certain direction for a certain purpose. So if you're trading with trend, you can let your profits run more. If you're trading anti-trend, so if you're trading a retrace, you need to be aware of that so that you can be a bit more aggressive with grabbing profits before it turns around. Okay, and then finally, if you want these outlooks and these biases with my key levels and just a quick explanation on key pairs that I'm looking at, I send it out every week in a newsletter. You'll also get my free PDF, The Funded Trader Blueprint, and my 7-part video series. So click the link below and subscribe to the newsletter.